comes to the currency side of things in Kenya, it's quiet. We've had this local unit trading in a pretty stiff trading range over the last couple of months. What's your outlook for the local unit moving forward?
Well, it's interesting. I mean, if you think about what's actually happened to the shilling over the last 3 to 4 months, it's actually been gradually drifting weaker in a very, very slow, sort of controlled manner. You know, you sort of look at it and it looks as though it's going nowhere, but 2 weeks later, dollar shilling is higher again. And this sort of culminated last week when we got up to 77.70. Sort of at a peak, and that seemed to have been driven at one stage by a bit of speculative interest, some offshore demand, and then some guys who had been long shilling got stopped out of positions, and so there was a bit of excitement at the back end of last week, and I suspect that part of this was being driven by the continuing need to import food. But that said, we should be very close to the end of the cycle of the requirement to import meaningful amounts of food, which means that one source of demand for dollars will hopefully start to dissipate out of the system.
Especially with the fact that you've got that agricultural sector seeing a nice uptick and exports increasing as well, alleviating some of the pressure.
They still have a shortage, make no mistake, they still have a shortage, but at least it looks as though the long-range harvest, which will come out later this year, those and the short-range harvest that have just passed, that those were pretty good and they were better than what they'd originally expected. So that is all good news on that side, but it still does leave a deficit and the requirement to import. That said, that might be replaced by, there was some news this morning about the wanting to accelerate the hydrothermal investment program, and there'll be we're talking about a few $100 million of investments going in there, but in the short term they need to import drilling machines, things like that, $30-40 million a pop, so there'll be a little bit of demand from there. But once you've sort of taken that out of the equation, you look at the rest of the economy, it actually looks pretty good. You spoke about the results of the hotel group. We expect tourism receipts to continue to improve. We've seen the tea harvest has started to improve. We got some remittance data last week, and all of these things are sort of pointing to a generally better structure for the shilling in the year ahead.
I mean, I was chatting to Ali Khan Sachi of Rich Management yesterday, and he said he's even forecasting a more optimistic growth for this year, sitting at anything between 4.5% to 5% GDP growth this year. So certainly lots of optimism that's out there at the moment. Let's get into some insight on the market and how sentiment is driving things over on that end. And for that, we're crossing over to Nairobi to chat to Samuel Gichohi. He's an investment analyst with Sterling Standard Investment Bank. Thanks so much, Samuel, for joining us this morning. Just looking at some of the drivers on the Bourse right now, it's all seeming to be about this positive sentiment that surrounds the economic picture in the country at the moment. What's your view on the kind of activity we're seeing on the Kenyan Bourse at the moment?
Hello. Actually, what I'm seeing is that currently, for example, we are seeing a lot of companies getting braver on the fact that they are issuing more rights issues. They're coming to the market, giving bonuses, and this is in reaction to the fact that investors are actually coming back to the market. The local investor has trooped back. We are very happy about that. We are seeing more than 50 to 60% being in local investors trading on the market. And so I think what we are seeing going forward is a return to the equities market days, the good days for equities, and the fact that the bond market has continued to perform very well is also another plus. So I believe overall the market is looking towards going towards the 5,000 mark very soon.
So how are you viewing yesterday's dip back then? Is that, do we see it as just a mere correction? And do you see local investors actually being able to sustain some of the impressive rallies we've seen on the NSE of late?
Well, I think there's going to be a bit of an easing in terms of the agricultural sector, seeing that now that Europe has gone into summer, the investors are looking at how that will affect the agricultural stocks who mainly deal in tea. We had seen a surge in tea prices, which had also pushed up or caused a rally in those stocks. So I think there's a wait-and-see position being taken by foreign investors, which is probably the reason why we are seeing more of local investors doing the activity or turnover in the market than foreign investors at the moment, seeing that they had been the ones who are very interested in the agricultural stocks. I think as we wait for the first quarter results, we do expect that investors are seeing more growth. We are seeing more bravery in companies coming to the market for funds, and I think that we do expect the market to, it's just a simple correction, basically.
Well, certainly the agricultural sector is one of the country's revenue earning sectors. The other is the tourism space, and within that arena we saw TPS out with numbers yesterday. Overall impressions of those numbers released?
Yeah, impressive, and that is it underlines the fact that we are going back into the profitable times. I mean, TPS is on the market per se, the one that really points towards how tourism is going, because Kenya Airways tends to be more in terms of business tourism rather than tourism, where we're looking at hotels and holiday makers coming to the country. So I think that the tourism sector has shed off the post-election issues. I think visitors are coming in. We've seen a lot coming from the Far East, and I think that's also pushing up the tourism sector. And I believe that that is going to be one of the major drivers of growth, seeing that with agriculture on the up and up and with tourism on the up and up, and being the two major pillars of our economic growth, then we can expect a more positive growth than actually has been forecasted.